Folks, I'm going to tell you 5 quick facts about black bull markets. Now, did you know, number 1, they're New Zealand FMA regulated. Number 2, did you know they have a copy trading service where you can either be a signal provider or copy signals? And number 3, did you know they've got over 26,000 tradable assets, including Forex, crypto, stocks, indices, and even more? And number 4, did you know they offer 500 to 1 leverage? And number 5, if you open up an account today and trade 1 lot a month, they're going to give you TradingView Pro for free. Check them out, Black Bull Markets.
Good morning, afternoon, evening. Hello. Welcome to the stream. My name is Gentsla, and we're out here trading our Blue Guardian Challenge. So let's get our dashboard up. And let's make this bigger. Okay, so from yesterday, we have, made a little bit of gain on the day yesterday. It's great. And we're still doing okay. So we're going to continue that. Let's go to our Guardian Protector, make sure it's active. Yeah, it's still in play, which is great. Obviously, the count's just been gaining. And we're out here. So good morning, everyone. Good morning. Good morning, Emmanuel. Morning, Tom, Warren, Ricardo. It's good to see everyone. Matt, Steph, Awab, and the Rhythm Group. Thank you so much for joining in, saying hello. Bejia, hello. Welcome back. If it's your first time here, then today might be interesting. We'll see what happens. All right, so let me just close this and look at the charts, because I'm watching this price action right now, and it's really interesting. So let me just present. Okay, so what we have right now in the chart, well, let's just go over yesterday while we're still waiting for our time. Just go over yesterday. So from here, we had all of this. It came up and filled the Hong Kong gap perfectly. Then came down, touched the previous Hong Kong gap. What a shocker. And then that arrow that's pointing up to the MMG on the buy side, that's our target. So as we continue going, I said that this 630, 730 was buy side liquidity that we needed to put in charts, and it came down. It actually switched over at midnight and then went up. And then we had, obviously, London come back in and come and touch the gap from there perfectly, literally on the pip. It went higher. And then during New York, where did price go? What a shocker. I mean, what a shocker. Every single day. Okay, now we have GBP. Same thing. It was set over here. What did we have? London did not come and see it, but in New York, that price right there between 950 and 1010, obviously your target was the Hong Kong gap, so you were taking sells, or you should have been. So today we have a new day, and there's big news today. There's the what is it? NFP, non-farm payrolls, coming out today. AUD again was absolutely perfect from yesterday. From that time, it went up, came down. At midnight, switched over. It went to fill this liquidity perfect on the dots. I mean, it doesn't get better than that. Switched around. And then, yeah, as I said, AUD has just been on a tear down continuously. So it's gone up, done this, come back, and then now it's just, I am expecting buy side though today, just because of the mid-morning gap up here. I'm expecting that to be reached for sometime today, whether it happens in London or they use it in New York. It just depends. Okay, so let's go back into this. I'm just checking the hour candle here as well to see what's happening. we're coming down. This is quite a large. They pulled price quite far away today during the time that DXY was closed. So what we're looking again is you have your 630 and 730 sell side and buy side. How do we get that? This is a very easy thing to do. You look at where 630 is, the lowest candle that's formed on that swing of 630. You can see there's no other candle that's lower before 730. And then 730, again, between 630 and 730, we have highs, a swing over here, okay, or swing, but it's liquidity. And so they've come for the sell side liquidity first, which means that I'm expecting longs to buy side. And I'm waiting for just another 14 minutes, and then we'll be looking for that. DXY has gone up. It's coming in to touch the closing of Hong Kong. We create an opening gap here. So again, what I'm expecting is price to come up here and then come back down. Yeah, so while it's on there, I'll have a look at the chart, the chats, and see what everyone's doing. Good morning, evening. What are you risking per trade? Well, right now, I'm going to amp it up to 0.4% per trade, just because I want to get the challenge done. Today, we might be actually looking at some kind of like a 10, 12R, depending on how the trade plays out, because this is quite a nice large range right now. They're busy setting liquidity over here. You can see this little bit of price action right over here. That is pure algorithmic price action right there. You can see that it goes 1, 2, 3, and then it hasn't come back for those. So I'm expecting price to at least come to here. And obviously what you can see is that there's a shift in structure right there to come down, and then it's continued to go lower. So this point over here, this fair value gap, on the 1 hour, if I were to pull that to the side and look at that little inefficiency in price, that right there is on the hour over here, is right up here. And if you were to look at the one lower than that, this inefficiency right there, where the algorithm actually started kicking in, if you use ICT's concepts, you'll know that that's consequent encroachment of that wick on the buy side. CE. So yeah, basic analysis this morning. That's how it is. I only trade in Asia. I only trade the USD cross pairs. The three main ones being Euro, GBP, and AU during this time. I don't look at CHF or JPY or anything like that. I only do those. When it comes to London, though, it's gold. Oh yeah, so let's have a look at gold. So gold, same thing. We had our Hong Kong gap, which is somewhere around this range. You can see 915 is here, and then 259 is around here. So it's somewhere there. We have it going up. We have it coming back in, and what happens? The price comes straight back in. So yeah, we go on to US 500. Last night, well, for me, it's last night. There's a gap at midnight there, which is interesting. Where's our time? Here and here. There's a Hong Kong gap. So that's been left open. During London and during New York, this Hong Kong gap's been left open on the buy side. So later on, again, I'm expecting price to come and fill that in. If it's not today, then it'll be Monday. Are you getting into trades? Yes, I will be getting into trades. If my model presents, I will be getting in. Gold looks like it had a cyber attack on the candles in New York session. But the actual New York session starts at 9:30. So all of what happens before is just pre-market. Did you take a trade yesterday in London? No, I didn't. I was working on my business then. Oh, cheers, Tom. You have a lovely day. Hope you have fun with whatever you're doing. So I can trade any session. The times for the sessions are 8:50 to 9:10 for Asia, 2:50 to 3:10 for London, and then I look at 9:50 to 10:10 in New York. And then I've got another strategy, which is basically ICT's one, except I kind of designed it before he even presented his silver bullet model. It's funny. We can obviously see the same things in the chart, so it's good. So I'm not looking there, I'm looking here. So are they going to start early today? No ways. They are. Let's see if this is a fair value gap. Gotta wait till the closing of this candle to see. Okay. How can we learn the strategy step by step? My strategy basically is I set the Hong Kong gap and the end dogs, the new day opening gap on my charts, as you can see here. So this is forming. The Hong Kong gap is forming right now. We're currently within the previous one. It hasn't been seen to fully though. So I'm expecting sell side. Do they start it early today? That's fascinating. We're a couple of minutes before the time. We've just seen a little bit of buy side over here. I think Euro's a fake out. So what I mean by a fake out is you can see how right over here, structure's been broken on the buy side. But if we look at AUD, that's pushing down. GBP has not changed structure yet. So this candle over here has to be broken before I can actually get in. But it's too early. That's why. I have my times for a reason. Bro, can you check EU sells? Can I check EU sells? No, I'm waiting for buys, according to my analysis. Because the buy side is actually it's looking quite nice. We'll see what price has to offer in a few minutes. This might be the push. We'll see. What'll happen is that they'll snipe it to go higher. Here, that what they're doing is they're waiting. Obviously, we're within a previous Hong Kong gap as well. So can you show us the opening gap? Thanks. The opening gap is a very, very simple concept. Okay. It's very, very time defined. Okay. So right there, you see there's a gap there in price. It's time defined. Meaning we have the closing of 604 and the opening of 745. Time defined. That little fair value gap has come in and seen to, but again, it's just before my time. So you see how we've pushed up here, just like I said, and then I'm expecting sells. So everything else should start coming up. But GBP and AUD aren't showing me love. And again, I want correlation. Oh, you want music? That's cool. Okay, which one should I play today? This one. Just to be a bit loud, sorry. Okay. How do we connect on? So I don't have an Instagram. Well, I do have an Instagram, but I don't use it. Make that square. Is the filter on today or Wilden? I don't know. It depends. I have to keep it PG for like a couple of minutes because otherwise the stream gets demonetized for cam for trading nuts. Sorry. So we're gonna keep it in our PG zone for now. What I'm actually looking at. Okay, so let me just stop the screen and I'll present my chart to you. Okay, so you can see over here, what I'm looking at is there's a nice void in price on GU. That will have to be seen to. They're creating square liquidity here. We've created some square liquidity down there. If we look down here, that's going to start pushing and pushing, and then this is going to pull with it. I have this open. It's always ready because I'm expecting buys, so I set up a buy, all right? And when the opportunity presents, I engage. There's no hesitation. And so yeah, if we're looking over here, let me just, if we see on the buy side right over here, we have there's a void in price there, and at the height over here there's also a void as well in price. So you can see there the height over there. That's not a volume imbalance, it's a void. It's an actual, there's no price in this area. It tried to come and fill this price in here, but it's left a void right there. So these things will be seen to. And we've just come in and filled this one over here, as you can see. So this has all been filled, of this price has been filled in now. So as soon as that got taken, then we're having some kind of reaction off of it. Okay, so my strategy is laid out and clear. So right over here we have 259 closing candle. Okay. No, of course we can. I'm wanted to add the only Gentsla. So let me put that in the chat. So I get. Yeah, TradingView doesn't show these voids. That's why you have to have your broker chart open and you have to be monitoring. TradingView is like it's sneaky in a way. I like it for its ease of use, but it's not necessarily. So yeah, right now it hasn't presented this time. So I'm waiting because again I'm looking at AU and GU. So they're pushing down and they're pushing down. I I don't choose any volume. I don't choose any VWAPs. I don't choose any of that. So yes, let's go on to, I'll present my trading view chart. Okay, so we have, what we have is 259 closing candle on the dot. Okay, we then have, what you'll see is 604. Like all of this stuff is, where's 604? 604, 604, closing candle of 604, because that's when it stopped. Then we drag that out to 745, which should be here. Yes. So the opening of 745, which is that red candle right there, that is your new day opening gap on Forex. Doesn't matter what, it doesn't matter what, that is your new day opening gap. Let's get this out. So you can put that same thing on GU, you can put that same thing on AU, you can put the same thing on DXY. Okay, now we're within the time that I'm expecting something to happen. That's why I don't trust it before my time. Hong Kong doesn't close at 4 p.m. Hong Kong closes at 2:59. $4 p.m. is when New York closes. The New York exchange closes at 4. Why TradingView don't have voids? I have no idea. I find when people connect their brokers to the TradingView chart, it's interesting because you're not getting all the information from the candles and price action that you actually require. So we have a large range right now. Let's look at GBP. Oh, we're building a nice little piece of square. How's it right here? It's good. It's good. AUD is also building a square. So this is perfect right over here. This is like a snap. It's going to come up. We're just waiting on the shift. Oh, Jeet, it's all manipulation, my man. So yes, on Pepperstone they might close at that time, but that's because they want you to be exit liquidity. Yeah, I'll show you. It doesn't matter what you're on, even on Pepperstone. Okay, if I go here and I go into the chart right over here, and I go back to the time where it's supposed to be. There we go. This is Pepperstone. Okay, what time is that? 2:59. Look down here. All right, so let me remove that. And what time is the next one? 9:15. So I'd yeah. My bias right now is long. We've actually just had a shift in market structure. That's snaky price action. I'm waiting for that to get snuffed. What I mean by had a shift is this candle right over here. That has been broken. Okay, that is your shift. Your fair value gap. But again, it depends on the other charts. Again, I want the confluence. and the times. We're within my time now. Yep, so that wasn't the one. Waiting. So now it has to set a new leg. We're coming quite close to the closing of the session right here. The daily opens all the way up here. So today there's going to be a separation between the Hong Kong gap and the daily. GBP's price action. It's interesting if you zoom into that. See that nice little box, that perfect square right there. This candle that breaks above here, I will consider a fair value gap that's actually valid. Again, we have to wait for the time. We have to have 3 candles. Yeah, it's actually valid. So what I'm actually going to do is I am going to, where are we? Current price. So I'm looking at this as a trade. A couple of bits below that and up here. So I just wanted to go into that fair value gap. Come on, price. So the hour just closed, so we have our wick. That wick needs to be filled in a little bit. Oh, it's not giving me my entry. Sometimes this happens. That's okay. That's okay. It can be frustrating. You know, especially when you see it happen and you know where it's going every day. It's like, can you not just give me my entry? Oh. Okay, while that's happening, I'll just keep an eye on it. So I'm just reading over the comments. So no, I'm not in a trade yet. I haven't. The entry wasn't given to. So the fair value gap presented, but price has just continued to go higher. It hasn't actually given me the entry. I wanted to snipe in this candle, this fourth candle here. I wanted that to go in here, and then start going up. But it actually hasn't given me that. It's just continued to rage to target. That's unfortunate. We have days like this sometimes where it will just immediately reach for target, and it's just difficult to get in. See what I mean? The square liquidity got sniped and then went higher. AU, that square liquidity has not been seen to, but it's reached for this one over here. That's square liquidity. I like square liquidity. It's nice. Again, I'm still within my time. So if price does want to come back down here, I will be getting into that. DXY, do you see how beautiful I mentioned that fair value gap? From there, it just went lower, but you saw the manipulation here. It actually came lower in price and then shot up. So were you looking for closing profits? My profits would be closing at the daily. But later, or if you hold it longer, it's up here at the 630 to 730 buy side. So my trade would be a 2R, or at the height of that, 2.76 at the height of everything, 4R. That's so unfortunate. Didn't give me my entry. Oh well, it's just life. Oh, you in it? Then you're making. You're making. Good. Mali, exactly. It's not me. It's just the charts. I've just identified what's happening in the charts, and it moves. So I was just able to piece it together. Can I explain how you trade in London? Yes, so you look for the opening gap or the Hong Kong gap, and in the Hong Kong gap, what you do is wherever price is, you target the Hong Kong gap. You should go for half your normal entry when it does not touch the FFG, just in case. I know. Like I said before, in my previous streams and videos and stuff is that you can, like I said, you can just YOLO. You can use whatever trading like system that you want, and price will go. Price will go to where it needs to go. As long as you understand where you're going, you're fine. Why does DXY do what it does? DXY does what it does because, again, when people are buying dollar, so DXY is dollar. When people are buying and selling the dollar, this point, the market is closed. So the orders that come in during that time, that's liquidity. But I mean, previous Hong Kong, it's like you can see the candles. It's just it. Yeah. Perhaps still valid on high time frame like M5. So yeah, you can pull it out to the M5. So if you go here on here and you go up to the M5, all right, it's the same concept. It's exactly the same thing. So price went below the Hong Kong gap. What happened? There was a shift in structure and price, and then it targeted the Hong Kong gap. What happened up here? It went above the Hong Kong gap, shifted in price, came and targeted the Hong Kong gap perfectly to the pip. Right? Actually to the pip. Then what happened is price went up, and pre-session for New York, your 950 to 1010 was over here. Okay. Why do we think it's not going to go up here? Well, because the Hong Kong gap's down there. So it needs to go. All three sessions played out perfectly. It went down, came in, and offered proper liquidity, entry and exit price. It went up, it came down, offered liquidity. It went up, New York, it came in, offered liquidity. Perfectly to the pip. I mean, this is not random, it's not luck. It's exact every single day. Previous day is exactly the same thing. We have our session over here. Okay, so this was our gaps. What happened was during Asia, it went up, came down into the Hong Kong gap and daily open, came down. What happened during London? It went up, it came up, and then from there filled in again. In New York session, what happened? It came down and went into that perfect. So it's not, like I said, it's not random, it's not luck. It is how the market works. But the way that I trade, again, my system of entry and stuff like that is how I trade. Is ICT. I give everything to ICT. He literally changed the way that I view the world. On the Hong Kong gap video, it wasn't as in that video there was not the explanation of that you cross correlate the Hong Kong gap onto your other charts. So Euro USD is perfect, GBP USD is perfect. This is algorithmic right here. That price action right there is algorithmic. But yeah, if I don't get the entry that I want, I'm not in the trade. So that's okay sometimes, but guess what? You know, sometimes we get it wrong and we miss our entry and it's a wasted session, but it's not wasted because you're on the charts doing what you're supposed to do. You just need to be present every single day. You come in, do the same thing day in and day out. So yeah, Ryan, that wasn't like an interview. That it wasn't. I was actually just chatting to. I was explaining a little bit about where I found the Hong Kong gap, and how I didn't actually explain how I use it on my in my days. So again, I cross correlate that onto everything else, and it just works. It really just works. John Holmes, I enter on the bottom of the fakes at the bottom. Nice, well done. So right now you're sitting in decent amounts, yeah? Thank you so much, Ryan. Thank you so much. Great bias, and I respect the order discipline. Yeah, thank you for saying that. Again, my strategy and my discipline is me just making sure that I stick to it. Yes, I could have made money, but again, it didn't come in. If you look at this on whatever, if it's a crossover, if it's whatever, you would have been in and making money. If you entered at the bottom right here with like a couple of pip stop, you would have still made money. We know where our bias is. We know how we target it. With 105 lots, I was going to drop a 10 lot if we hit that FUG. Yeah, my risk parameters right now, I'm on a 0.4% risk. I've increased the risk. And that probably would have put me into about at 19, 20 lots. London session starts at 2. What's the requirements of entry? A market structure shift, and then you target. Exactly, Stealth, exactly. It does make trading so much easier. That's why having a target and knowing where to go, even if you're wrong, you're like, okay, it's fine. Majority of the time, you'll be right if you use the Hong Kong gap and the daily open. 3x, 2x. I'm not in the trade because it didn't actually give me my fair value gap. So yeah. Oh yeah, we have our Hong Kong gap set now. So let's just do that. 11, 12, 13. No, we're not there yet. 14, 15, 16. So again, you're looking at what's happening over here. What you'll see is at 9, 15 or 16 on the dot, okay, there'll be a breakdown or a break up, one of the two, okay, and then that is basically where I got the idea from. I don't trade the Hong Kong 50. I trade Forex and indices. Forex during Asia and London, and indices in New York. That would be cool. How do I draw the Hong Kong gap? So I've already set the sell side for the Hong Kong gap. And then right now it's busy. So you can see how it reached the daily perfectly. If you're going to take partials, now's the time. If you're in a trade, to like at least take off 50% and move everything to break even, because there's a high probability now that it's setting the side of the Hong Kong gap, and then it might reach higher, but we then need to come in and fill the Hong Kong gap. Is there any point at which you would remove a Hong Kong gap from the chart? Over time, your chart gets very, very cluttered. So you can just remove everything and just work on a day-by-day basis if you want to. But it's very nice having the ones. It's a very good question, actually. It's very nice having the ones. So if I set this, for example, I know that there's Hong Kong gaps above here. So if I'm going to be in a trade, like a long trade, and I've taken it from here, and I target the Hong Kong gap, well, the next one and the next one and the ones above it might also prove to be a valid place. So here we're targeting the 630 to 730 buy side, like I said. Can I explain how we enter using ICT in London? Do you use SMT? Yes, I do use SMT. I'll explain that just now. I'm just going through all the things. What do you think of the relevance of Hong Kong Exchange versus Tokyo or Sydney? Okay, Glenn. I explained this previously as well, but the relevance of Hong Kong is that Tokyo and Sydney and most of Asia trade through Hong Kong. Okay, Hong Kong was a British-owned, well, not owned, but was kind of controlled by the British for a long time. And a lot of the Silk Road, or all the trading that went through Asia, came through Hong Kong. You had to go through Hong Kong if you wanted to go to Australia in the beginning. And so that it's a big, it's more prevalent in my opinion, because if you look at the market, it's huge there, and because they are an old British colony, like a lot of liquidity went through there, and those habits have been set, like I said, since the Silk Road, for centuries. If it goes to my entry zone, I get in. I don't. Looking at it now, it's not in my purview of time, but again, I'm waiting. If at 9:30, okay, at 9:30 is usually like news time, okay, like yesterday, 9:30 was news, and it went perfectly from 9:30 to where I wanted it to go. Then what happens is that will be like a change around in the structure and the market. But now that we've filled this in, what's not completely filled yet, there's like a little pip missing there. We have just set our opening of the Hong Kong. So we go look at your Hong Kong over here. So closing, opening. It's not big. So it opened up and then came down through, and this trading price. That's a very, very small one today. Since how long you use this strategy? For months. Months and months and months. Like I said, it was about 9 months ago that I found it. And then I was sitting on the toilet, and then it was like a brainwave, and it came to me, and I was just like, wow, this actually is legit. It took a while, because I had to literally scroll through thousands and thousands of 1 minute candles to backtest and make sure that everything was solid. Warren, yeah, man. Thank you. Would I ever take a market shift as an entry confirmation? Yes. So there's many different ways on how to enter. How you enter is all about you, and so I'll actually get onto that while we see what price is doing over here. So hold on, I just need to set the Hong Kong gap quick. 916 open. Okay, again, you put this on your chart, and throughout the whole day, it's like your reference point. It's the base. Whether you're in this place and you're trading away from it, or you're outside of it and you're trading towards it. That's generally how it works. Okay, like I said, there's lots of different ways to take entries and stuff like that. Like my way is using ICT's method. So back onto the other question, I'll explain the two things at the same time. So there's lots of different ways to enter. My entry is from 250 until 310. Okay, what do we have here? There's a shift in structure. There's a fair value gap right there. And in London, I'm targeting the opening gap. But what happens? This is why I have my 2R rule, is because over here, right over here is 2R. Okay, so I've taken half my trade off. and then the rest comes up for break even. Yes, it snaps out, but there's a high probability that later on it's going to come down. If you're taking a different strategy, if you're taking a let's say it was a fractal, okay, we have a low, a high, a low, this low breaks that low, so we know that after that fractal has been created, between that time the price goes down, comes up, and then what happens is we create another fractal. So if you're entering down here with your stops up here and you're just targeting, it's whatever. If you have a moving averages, they would have crossed over here somewhere, and then you're targeting down there. Previous, I'll show you another London one. Okay, so Hong Kong is up here. Okay, that's Hong Kong. So price shifts over here, and at 2 o'clock we have this. At 250 to 310, what happens? Well, there is a shift right over here. Okay, we have on the 5 tick, you would have had a fair value gap right in there, and you would have been able to take your trade from there to the Hong Kong gap, especially after taking the daily low after public holiday. Previous, go on to another one. We have our Hong Kong up here, okay, and what we have is from 250 to 310. Guess what? Price does not create a proper market structure shift. Then as soon as it does, which is right over here, it forms this liquidity and then it breaks it. Where's the first fair value gap that you can see? Well, that's right there. What's target? Target is the Hong Kong gap. 115, 252 up here. Yeah, right there. And where does price go? Well, beyond that. This was my London entry this week. So what do we have? It came up, it went down. There was identified as a fair value gap here, but the other charts were correlating the same thing. So it was invalid. Then what happened was it came up, price went up. Right there is a market structure shift. So it came down, it didn't create a fair value gap. It came up, it went down, it created a fair value gap. Now, the price moved and then came down, and I was like, well, I think that it's going to continue to rage down like it did today, where it just went up. Okay, so what I did was I entered on this perfect, where it's perfect over here. I just started creating squareness, and I was like, okay, I'm taking the short, and then it went down. So yeah, this is how that's how I trade, and the strategies that I have around Hong Kong. New York is exactly the same thing. So you're looking at 950 to 1010. Where's the Hong Kong gap? It's down here. So between 950 right over here and 1010, which is over here. Okay, in that there is a market structure shift right there with a fair value gap right there, and then that is an entry to go down to the Hong Kong gap. And I know right now we're trading in such a little small pips and stuff. That's why I don't trade with pips. I trade with market structure. That's how I define my risk. Yeah, man. ICT trader, exactly. So all my entries and stuff are ICT's entry techniques. And they all come from me learning all of his videos like literally back to front, all of his strategies, like everything that he does. And I always wanted to know why. Why is it that Asia is so important? Why is the liquidity below and above Asia so important? And the opening gap just didn't explain it enough because there was no proper time reference. And so that's why DXY, when I'm looking at this, I look at the time of that gap. So sometimes it's different. So what you'll have is every day is not the same. Where's this opening gap? It's over here. Okay. So right over here, what we see is time is continuing. 45, 604. No, that was the same. And then we go back in price. I'm just going to check that. What's the chart doing? Chart's not doing much. There's a 3-minute gap there for some reason. Where was it? Here we go. So every day the gap is not exactly the same, as in exactly the same time. So they'll change it, manipulate it. So as you can see over here, 14, 47, 8, 9, 50, 2, 3, 4, 5, 6, 7, 8, 9. Here, between 1659 and the next candle, there's a break. So opening gap starts at the closing of 1659 and the opening of whenever the biggest one is here. So 6 o'clock. So this one was 6 o'clock on the dot. So we have the closing of that and the opening of that. That is opening gap for that day. The day, like I said, the majority of the time it's 6:04 to 7:45. But what you can see is that gap over there, if I pull it out in time, okay, between 8:50 and 9:10, there's a shift to target the gap. Then we go over here. Then we have 1 o'clock, 2 o'clock, Hong Kong gap set. What we're looking for between 250 and 310. Wait, what price is this? We're looking for a market structure shift. Now, do we have one here? No. 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 Yes. And then proper break, fair value gap. And what happens? Price targets down there. So, yeah. The Hong Kong gaps, like I said, are quite important. As you can see, this was set and then price went up, came into that perfectly. And as I mentioned in the beginning of the stream, I expected price to come up and then come down. And look what's happened. So seeing these things in your charts will just make you huge. You can at least try it like get break even, because you're able to identify where the market's going. And like I said, it's up to people to, like I said, whatever strategy you're doing, just the times that you do it in, when you do it. I can't trade daily and stuff like that because there is structure, but there's no exact points and relevance. That's why you hold these in your charts. So if I go to the 1 hour, you can see that it's just like a big fill of like lines and crap. This was not filled. Where did price touch? Wow. So it went all the way up, went up again, had a massive break if you're trading the 1 hour. It came up to this Hong Kong gap, which is right here. And then from there, it started coming down. So these little price points are all very, very specific. That's the one I'm actually looking for down here. There's mid-morning gaps that's unfilled on the sell side as well. This one here from the, it's Wednesday. This mid-morning gap here, that's not been filled yet. So that's why I have this big line on the chart here. because I'm expecting price at some stage after it reaches for some to come down. But yeah, I take them off. So I use the previous legs. I keep those on the chart, but then all the rest I take off. All the rest, what you see here, these big lines and stuff, that is the bankers levels or whatever. I call it the round numbers. So round numbers are also very important. Why? Well, if you look over here at the 1.08500, what happened to price? Well, price came down, went up, came down, went up. This Hong Kong gap is within the 1.0500. What's our next What's our next round number level? Well, 1.09000. So it goes up to that on the dot, comes right back down to here, then goes back up. So if you continue looking at this and you're adding it, that 1.09 you have here, perfect, it comes down. It then goes up, perfect, and goes down. So when I'm adding confluence, I'm looking at that level over here again is 1.092. Okay, 1.092 comes up there, taps it, goes up, comes back down, comes up, 1.092, and goes on going. So what you're looking at is let me just zoom this out and put it here. You're looking at the 0.6 or 0.5 or whatever it is, and then 0.58 and then 0.55, which is in the middle here. It's not spot on, but let's just change the setting. Okay, so that's 1.055 and then 1.052, 1.05. And if you do that, what you'll notice is, let me just go out into like the 4-hour chart. For those of you big traders, because yeah, I've done it for like everything. Okay. And what you have is price goes down, comes back to the big round number, goes up to the 8, comes back down past the big round number, comes up to the big round number, big round number, big round number, and reacts. Bang. So round number down there, it carries on moving. As it starts setting this up, you know that round number right there, 1 to whatever that is, okay, is quite important because it starts building up a whole bunch of stuff around that area. So you're looking at the ones in between. You're looking at the spot 5 on the dot, up a little bit. Okay, so what we're looking at here is that big round number. Okay, what happens is price comes up to there, comes down 200, 800, down to the last round number, back up to that round number, 800, and continues going in between. So that, like, if you ever a whatever trader and you're using that in conjunction, 800 comes down, goes up again, 800, 500, and keeps on going. Massive gap in here, comes up. It's anyways. It's mind-blowing when you look at the precision in the charts. You just have to be able to identify where you are. Okay, let me go look at the comments. How long are you using your strategy? For months. What exactly is 6:30, 7:30? That's a time, a liquidity time that I use because it's very, very close to the opening gap in DXY. And what I found is that when price takes the one side, it'll generally then target the other side. Exactly, Michael Banks, exactly. But not every shift is the same. So from my case in point over here is that if price went up here, see the time there is 8. Sorry, I'm just zoom this out. The time here is like 8:30 to there. It's not my time. I use higher probability times in the charts. So I'm not looking at this time. I'll be looking at that time. because that's when price is most likely to go to where it needs to go. The 3 o'clock, that's why I don't use 2 o'clock. I use 3 o'clock generally. And what that does is there's a higher probability chance that from that point, it's going to go down. So not every single fair value, not every single shift is legitimate, if you know what I mean. So like this one over here, it happened just after midnight. Like, yes, that would have been a legitimate shift in structure. And if you identified that and did it, great. But that is not when I activate my system. And you can just continue going back and you'll see it very, very clearly. My Asia is precise. It is precise. What happened over here? There's no fair value gap, goes up, precise. We go back to Asia. So we have Asia. You have the Hong Kong gap up here. As you can see, it's all set over here. What happens at between 8.50 and 9.10? Well, there is a price action. This is what I wanted to see today, actually. I wanted to see this. That candle there. But unfortunately, price didn't give me the option to do that. So where's my 250? 250. No. Yeah. So this would have been my target. But yeah. I reap the win rate. You sure you want to see? So yeah, I don't do mentoring. I'm here just giving you my ideas and how I view the market, because personally it took me a very long time to understand ICT concepts. And what I've done is I found the times, the perfect liquidity, and you have to be exact with it to be able to do things. Because I always had to, like I said, I had to find the why of the trading. I had to understand why I want to do these things, and I have to be exact. And I don't do random. I don't do luck. I do my trades. Tony Fisher, does it work on stocks? I don't know about stocks. I know it works on indices. And again, because it's here, I'll show you the US 500. Okay, yesterday, case in point. We have our open all the way over here. Okay. Your 9:15. No, that's not open. That's midnight. It's interesting. Over here. So closing of that candle, which is right there. Opening of 9:15. This is an important. This is an important one for later on in your charts. Okay. 15, 16, exactly the same. No, it's different. 16. Okay, this is an important gap right now because it has not been filled in London, and especially didn't get filled in New York. But my bias, I don't trade any of the times in London on indices. I only trade in New York. So again, we're looking at price over here, and what do we have after 9:30 closes right there? Wait, 9:30 opens. Okay, that all of this price up here is one big gap. All right, so what are we looking at? We're waiting for price. There was a shift in structure here, but that fair value gap was already seen to before the structure, so you wouldn't have taken that. Comes down. There was a shift over here, but all of the square liquidity would have kept you out. So see how nice there and there? It's too perfect. When you see that, you know the price is going to come down. So we wait for that. That gets taken, comes up, gets taken, comes up. Where's the most meaningful shift? Well, there's a big leg over here, and then we have a big shift in price. That right there would have been a very high confluence entry. After that, you literally have price within here. You can enter off volume imbalances. You can enter off fair value gaps. You can enter off a moving average. You can enter off a trend line. So here's your trend line. Okay, price goes, does this thing, breaks, and then after here, you know the price going up. You can put your stops down there, but you know that price has to come within the gap between here and here, and price does. So you'll see it the previous day as well. No, that was a public holiday, but even on a public holiday, it's the same thing. Okay, so price opens at 9:30. Okay, right over here. That's where it opens. Right over here, we have our Hong Kong gap. All that is over here. Okay, I don't even need to put it in the chart, but I know it's there. So at 9:30, we know that price is going to go and target. It's not magic. It's just a pure observation. So we go back another day. Let's go 9:15 to up here. Okay, so it's around here to 9, 15, 16, this price. That is your gap. So as soon as price opens at 9:30, which is down here, okay, I'm sorry that's skew. Where do you think price is going? Shocker. Again, you can enter off whatever you want. That would have been my entry. Wouldn't have worked out, but you can have volume imbalances. You can have, okay, this trend line's been broken. You can enter off that. You can enter off a shift in whatever. Moving averages, it doesn't matter. You know where price is going. It makes life easy. So let's do another day. Another day. Woohoo. Another day. Okay, here's a perfect explanation right here. Okay, we have equal highs over here, and we have our Hong Kong gap set somewhere in this range. Okay, as soon as 9:30 ticks over here, that there was actually a big Hong Kong gap. Okay, now price comes in from 9:30 over here. Okay, the gap's been set. It goes and targets the Hong Kong gap. From there, price reverses and targets the other side. And what are we doing? Waiting for the next day. The next day does a beautiful thing as well. We have that set. It's set. Price is underneath here. 9:30 comes in, fills the Hong Kong gap, goes up to the other Hong Kong gap that wasn't filled before. From there. And so, yeah, just taken that concept and done it over and over and over and over and over again. Good question. Thank you, Matt. Thank you. Earlier, the Hong Kong gap, you can go watch my video, or you can go watch last week Thursday's video, the 29th of July on Trading Us channel. It's a live stream. So make sure you click on the live button, live, L-I-V-E, and then go look at that. What are the times for each gap? HK, London, New York. The Hong Kong gap is cross-correlated from the Hong Kong 50. So it's not, it's the times, 2:59 and 9:15, and you should be close. Okay, you just put those same times onto your other charts. Like here, I have 2:59 and 9:15. Price came down. Here's the daily open. Okay, so that's the one I talked about in DXY. Came in, tapped it, and so price doing this. And yeah, we created the Hong Kong gap that doesn't need to be filled, but because that's on the buy side, that was my target. Now we have my MMG, which is up here, which is another time factor from Hong Kong 50, which is 4:29 until 5:15. You can see every single day, it's the same thing. So this is the AM. That's why it's called the mid-morning gap. That's why I call it the mid-morning gap. So between 4:29, right there. See that candle? Yeah, anyways. And 5:15. 15 open over here. Okay. This is a mid-morning gap. Now what's nice is that the Hong Kong gap is here, the mid-morning gap is set. So you know price is going to come and tap into it for continuation. Previous day, let's do it again, mid-morning gap. $29 closing. 15 opening right there. Okay, that's your mid-morning gap. So what happens? Well, price comes in, goes up, comes down, fills it, goes down. It's yeah. Again, it's not just lines on the chart. It's not just random zones. Like these times are exact and they're precise. So we do another day, and this is the last one. I'm gonna have to go. Okay, yeah. $4.29. Look at the perfection of each of those candles. 5.15. Open. And that's exactly on the 0.9, so it's exactly on a round number. That's huge. When you find things that are like that, so this is the mid-morning gap, you'll see then there is consolidation in that area. Okay, but ultimately what happens is price goes above it, goes into it, goes down, and just look at the consolidation. Where does price come to? I mean, yeah. Anyways, you do it. You can do it yourself. I mean, I know all of you have got beautiful brains, and yeah, it just put in your charts and just watch what happens from these places. Sure, Warren. No worries, bro. I'm actually going back to South Africa, I think in like April or March. Yep. You used QP. What is it? I don't even know what QP is. My charts are set to New York time in case everyone around the world has different times. People trade from South Africa, people trade from Australia, people trade from Indonesia. It doesn't matter. We all set it to the same time and it's easy. A high probability times. The high probability times are there's two times. You either have a 250 to 310, or in large range days, you have 6 p.m. I mean 6 a.m. Sorry. So what I mean by that is, let's look for a large range day. This is a large range day here on Monday. So it's a huge day. Okay, came all the way down. And what do we have at 6 o'clock around-ish? There is an indication of the move going to go higher. But of course, after 3 o'clock as well, so large range days, it didn't work out at 250 to 310. It started going lower. So my next time would be 6, and I would be looking for higher things. Here's another day that's the same. It's kind of a large range. Okay, so what we have is there's a big range. It creates more of a range, and then I would be looking at 6 o'clock, which is here, for price to go higher, to go into the gap. right over here, this is a massive large range day. Okay. There's another. This was a consolidation into that big liquidity on the buy side. This is a small range day, so you can use that. Weekly open, yeah. So yeah, that's why I have these things on my charts. I see there were people actually posting comments and stuff on the video saying that the gap is ICTs. Yes, it is a daily opening gap of ICT's thing in Hong Kong, but I've never used those. No one ever explained those two specific times of 2:59 and 9:15 as a gap cross-correlated onto other charts. No one's ever done that. So I've got 250 to 310, 950 to 1010. Is the other high probability set up for later? We're talking about afternoon session. Okay, I've just got a couple more minutes. Okay, so US 500. Now this is a later time. Okay, what we look for is you look for. Okay, this is it. Here, let me just remove this stuff. This again, this is what it's like blind trading in a way. Okay, we know that lunchtime in New York is 12 o'clock, so that is the closing candle of 12, which is open 9:50, 11:59, and opening of 12 o'clock. Yes. Okay. Now we have 1 o'clock, which is over here. So between that 12 and that 1, you have this range. That is the setup for your liquidity. So I'll just put it over here. That's the high and the 12 to 1 low. Okay. What happens? Well, as soon as price takes this buy side, price makes a shift in market structure, and then that is a sell to the opposing side. As soon as the opposing side is taken, that is now a buy to the opposing side. This all happens after 1:30. So since 1:30 happens, you're waiting for a shift and then a snipe for liquidity, and then it gets taken. Then we have, let's do another day. That's public holiday. Yeah, this is perfect. So we have the sell side here, 12 o'clock, this one right there. And then we have buy side of 1, just over here. Now, as you can see, what happens is price goes above here, it then creates equal lows, perfect equal lows, absolutely perfect. What happens is price breaks down and targets, if you zoom this out in time, that point there. Why is that gap formed? If it doesn't seek liquidity, it will do it the next day. Okay, let's do it again. One last time. Here we go. Okay, so here we had a perfect, this was a perfect morning AM session. So 9:50 to 10:10, there's a fair value gap. Okay, that would have been a buy to the Hong Kong gap. Okay, over here. Then we would have had 12. Until 1, the lowest low. Price comes down. That whole range is lunchtime. So that's all liquidity. And then we have price that goes up there, eventually fills it in. Ooh. Last day. Up here is 12, right there, highest high of that swing. And 1 o'clock, which is here, so lowest low of that swing, right there. Okay. Now, if the market moves like this and doesn't take one or the other side, I don't trade. But you can see that even if the market's trading, you have sell side gets taken, we have a change in structure, and what happens to price. That is your target. So then if there's this change in structure, okay, and then it carries on going up. Now this is not the only lunchtime. You also have Hong Kong lunchtime, which is from what time? Oh, I'm giving you everything today. I'm giving you everything. Okay, but fuck it, who cares? Hong Kong lunchtime is between midnight, okay, here's midnight, and 1 o'clock. 1 o'clock. It's right there, the lowest low there and the highest high. This liquidity is important. This lunchtime liquidity. What happens? Price goes all the way up, targets the Hong Kong gap, all that good stuff, just like usual, and comes back to that liquidity. And we have this nice next, here we go, midnight, here we go. Yeah. One here, highs over there, okay. And we have our 1 o'clock, which is here. Okay, I just say 12 to 1 because I use it in both. Anyways, price comes down, it creates a market structure shift. There is a fair value gap, and buy side gets taken. After that, sell side gets taken. Funny. Okay, so you've learned a whole bunch of new stuff today. I hope you've enjoyed. Okay. The lunch times are important. Now, if you see liquidity that has come to, again, you can create your strategy on whatever, as long as you're able to identify what the liquidity is. That lunchtime liquidity is not necessarily the liquidity that every session will monitor. So it's a very specific time frame. Okay, so thank you so much for tuning in today. I've got to make moves, and yeah. I'll see you. Have a wonderful, wonderful day. And hopefully that answered a few of your questions and all this kind of stuff. All this other stuff in the charts is just going to give you more ammunition to be like, whatever, to just get in. But you have to be very, very conscious of when to trade, when not to trade, how you are emotionally. Because if you can't handle your own emotions, then you're like, well, I have to get into a trade. Today, I knew price was going up. It didn't give me my entry. I didn't enter. That's just how it is. I'm not going to waste emotional capacity on it. Like yes, this trade would have been a banger, right? It would have been great, but it didn't give me my entry, so no. I'm out. Then I'll see everyone on Tuesday. Okay, and whatever trading system you have, again, have your rules on, and you need to be able to look at the different days as well. So there are days that that things happen in price where it's kind of dodgy. Okay, like for example, on large range days, I don't look at the 250 to 310 because it's a large range day, and so I'm expecting price to continue pushing because retail is getting in and continuing to push. So the time shifts to a different one. We then have like news trading, for example. Yesterday, my strategy. Okay, where is it? Here we go. So again, my fair value gap didn't give me an entry, but what happened was it took this and came into this little price here and slipped me in a little bit, and I took a trade. Now I knew the price is coming up here. I know it's coming up there. But there's been lots of times where it will come back and then continue pushing down. So I have my break even for a reason. It's to stop me and prevent me from taking a loss. But we know eventually that price does come down at midnight and shifts to go up. So that was a news trade. Why? My time was between 8:50 and 9:10, which is here. There was no shift at all. The only shift that happened was over here. What time was that? That happened at 9:30 on the dot, because the Australian, the Royal Bank of Australia, Reserve Bank of Australia, sorry, came out with their news on AED. You can see that was reflected. Right over here, 9:30 on the dot. There's a big candle. Okay, yeah, I know you don't think of it as big, but Australian news, that's what the shift was, and it came in and filled up the whole leg. My price prediction was up here, and look where it went to, that Hong Kong gap. Perfect. Okay. Oh, sorry, you can't see the chart, but anyways, I really do need to go. So thank you so much for tuning in. We're just going to keep on trading, and yeah, the only reason I'm actually doing this is to share this with everyone so that everyone understands what's going on, and also to show that you don't need to be risking 4% and take 2 trades and maybe blow an account and waste money. You can take your time. You know, the thing that we're looking for as a trader is to be consistent. To be consistent is the key. If you can take trades every single day and know that you are correct and that you can make money every day, why risk 4%? Why risk 5%? Why risk even 1%? Because over time you'll make that money. There's no point in it. I don't need to do this challenge. But I'm here to show everyone how I trade, how I think, and hopefully you have your aha moment and you start putting in your chance and you're like, wow, this is actually mind-blowing. I don't need to be gambling. No, you don't need to be gambling. Trading is a long game. Everyone thinks it's just a 5-minute get rich quick scheme. It's not, because you have to deal with yourself, you know. So hopefully everyone has a lovely day, and I'll see you next week. Take care, everyone. Bye.